What's going on? Green Dot Whisperer back to bring you some information on ETFs. My cousin is going to graduate and become a lawyer, so she's going to be considered a high income earner. And she wants to know what's the best way to invest as a high income earner. So, high income earners, they usually hold jobs like lawyer, engineer, you know, doctors. So their job makes them a lot of money, but it also takes up a lot of time that they can't closely supervise their investments. But they're making so much money that whatever they put on it, they can move an investment, because it's like they're not starting with $100 a month. They're putting maybe $3 a month or whatnot. But so what's something that could give you an automatic investment plan, but without having to focus on it? And the only way that you get safety that way, if you're not going to focus on it, is by diversification. You need to have your money covering the entire market, basically. So that way you catch cycles in different sectors. So I'm going to present a ETF here. It's a real estate ETF. And it's one of the three ETFs that I would use to cover the entire market. But I'm presenting this one first, and I honestly believe is the best one. I love real estates. I love REITs, and this ETF concentrates on investing on only on REITs, office space, mall space, storage space, every land type you could own. Data center REITs, which is one of the best performings right now. So I'm gonna show you what it looks like, and tell you why I think it's the best fun. So this video again is for my cousin, and this is the Green Dot Whisperer talking to you. I want to invite everyone to join our chat room, Chart Champions. It's still free while it's still free. So go ahead and join. It's still free for the month of December, giving it away for as a Christmas gift. Hopefully people who want to learn and share their tricks, or if you're it's a group for the beginner investor and the experienced investor. If you want to learn and see what people are investing in and how they're working every single day, come check us out. Ask any questions. If you're in a seasoned investor and you feel like you could spread some more knowledge, or you feel you could gain some knowledge from us, because the guys in the group, that they're showing amazing success. Amazing success. Everybody's making money now. So there's a reason why we call each other chart champions. We really do this. We on a daily basis, never quits. Just made $480 on shorting and buying Bitcoin on a Sunday night. So it's learn your charts, join the group, chart champions. Now let's get to work, guys. All right, guys, here. This is the stock, the ETF that I want to present to you guys. It's the Vanguard Real Estate Index Fund ETF shares, ticket symbol VNQ. Currently at a price of $86.42. 52-week range has been down to 55. That was probably in March, I guarantee you, around Corona time. I don't think we're still allowed to say that word, but I'm not big enough yet. Um, yeah, so I mean, this was what, March 18th. You can see that it was at $62. So that was your low right there, and it proceeded to climb. It's still the stock is still below the S&P, I believe. So you still have room to run. This is why I consider the stock one of the greatest things, because I love dividends. So I love being paid quarterly. And this stock pays you quarterly. So over here, you have a yield on this fund. I keep calling this stock as an ETF, exchange traded fund. But yield 3.86%. Not bad. Most of the S&P 500 companies pay a 2%, so that's above average. So And then here, this is another one of the greatest parts that you should always concentrate on when you're looking at ETFs is the expense ratio, how much they're going to charge you. They're not even charging you a whole percent. They're charging you 0.12% of your money. So on an annual basis. So that's great. Because you don't want high expense ratios where they're just taking money out of your account. That this is reasonable, especially with the yield. The yield alone negates the expense ratio. So a great fund, cheap, doesn't cost you a lot in maintenance fees, expense ratios. And here, guys, these are their top holding. I told you they invest in all real estate. They got American Tower Corp, ticket symbol AMT, Pro Logistics, PLD, Crown Castle, another data center international, CCI, Digital Realty Trust, another great data center REIT, Public Storage. If you're from America, I don't know if they have this overseas, but it's a storage unit place, huge. Wells Tower. These are all great big real estate owning companies, and they all pay out dividends. That's why you get this 3% dividend. That's the average of all the dividends. One of the reasons I don't like ETFs is because if you take the average of all the dividends they're actually being paid and received from all the stocks I just mentioned, it's probably a lot higher than that. So they're giving you what they want to give you. That's a 3.86% yield. But if I came down here and bought all these stocks myself individually and kind of replicated this fund, you could tell they tell you how much they have invested in the stock. So AMT 8%, 6%, 5%. So I could add all of this up, and this would probably end up being like about more than 10%, 10 to 20% of the fund. So I could replicate this fund by myself and get all the yield and not pay no one else an expense ratio and not have money being shaved off the top. Basically, that's why I actively manage my money and I don't like sharing it with anyone. So that includes ETFs, index funds, mutual funds. I feel like I am talented enough that I can manage my money, my portfolio better than paying someone, you know? But if you don't have the time to do that and dedicate all that time and you just know how to make money because you have a great job, this is a great fund. You won't, you could sleep good at night. It won't be that crazy. It's not that volatile. If you can tell by the beta over here, 0.78. Anything above 1 is considered to be more volatile than the average stock, the S&P 500. So this is below 1, which any beta below 1 on the long term always equals to a return pretty much. You could back check it, study the history. But this is the best part. I love dividends. I love being paid for a while. If I'm going to hold something forever, I want to be paid. I don't want to just stare at it all day. I want to be paid. So here you go. You come over here under historical data. You click over here, click dividends only. And it's going to pull up a list of all the times it pays its dividends. So you can see the last time it paid a dividend was September 25th, 2020. It was 59 cents for every share that you own. So for every $86.42 of a share that you buy, you're receiving 59 cents per. So that's how you figure out how much they're going to pay you. You multiply it 59 cents times the amount of shares you own. And that's how much they pay you. So you can tell that this one's a March, June, September, December pair. They're going to pay you 4 times out of the year quarterly. And they tend to keep these dates the same every single year. So great fund, great ETF. Cuz I hope this helped you out. Look into this fund. It's top notch. I'm going to release 3 different videos with 3 different funds to help you cover the entire market. But honestly, I should have probably saved this for last because I believe this is the best fund. If I didn't want to choose all 3 and I wanted to consolidate my money into one fund just because I'm riskier and I want more money and just because that's what I do, I would pick this one first. I should have saved this for last, but I'm giving you the good things first. All right. So I hope this helped. See if you have any questions, cuz, or anyone else, the whole YouTube community, leave a comment below. Don't forget to subscribe and like the video. And if you still want free stocks, webull is giving out, I think it's up to 4 free stocks now, but I still say 2, but I'm pretty sure it's 4. So now's the time to join. $100 deposit gets you 4 free stocks, and it's a great deal. So I wish everybody safety. Love you guys all, and I wish you more money all the time.